The broadcast is now starting. All attendees are in listen-only mode.
Hi there. Welcome to our Scientific Forex Live webinar. My name is Christina. As usual, please let me know if you can hear me. Type yes into the chat box on the webinar control panel that is at the right corner of your screen. Also, you can send me your question by typing them into the chat box, and we'll have specific section to answer them. This session is recorded and will be posted in the members area for you to watch or download. The previous webinars are already available in the members area. Just click on the webinars tab. Remember, our team is available if you need any assistance. So just let us know and we'll do our best to assist you. For today, I want to talk about, I want to review something about the indicators that I'm using in the system, and I want to change a little bit the format of the webinar. I will make in the first part the analysis of one trade, and in the last part we will talk about candlesticks. We will have probably a few webinars about candlestick, maybe 2 or 3. For today's webinar, we will talk about some candlestick and I'm not so sure that we have time also to talk about candlestick patterns. Okay. So I can see that the sound is good. If I will unmute myself from time to time, I'm apologizing because I have flu, and from time to time I'm coughing. Maybe I don't want to disturb you too much. Okay. So probably you know very well already this graph, the chart of euro-dollar daily. I will just use this chart for help you to make one comparison with one other trade and one situation that we are something very similar with the one that we are now on euro dollar. So we have the trend channel. We have first wave, second, third, fourth wave, but here the pair didn't reach the superior trend line. So it is possible that in the next days to see one try of the pair to break this superior trend line. Remember that we are on daily, so I will draw Fibonacci from on the last wave. And we can see that it's possible to have this intersection with the line at that 50% Fibo level. Just we have to be very careful and to have one idea of how one pair is acting when it's very close to one trend line on a channel on daily. I will go to analyze with you one trade that I posted on Facebook. One trade on that was made on Euro GPI. After we will make that example of trade, we will come back here and we can see what chance we have for the next day with Eurodollar. So my trade on Euro GPI was on 6. Actually, on that example, I have two trades. I have one buy on 6th of January and the second buy on 13th of January. So on Facebook, I had one message like this. So on 6th January, around 3 o'clock in the afternoon, my time. Okay, in this area, I entered into one trade. So here was my entry. At that level. I said that the stop loss should be around 97, 440. Somewhere there, the stop loss. So here was the entry. I will put it entry 1 because I have the second order in the market in that example. And I will set the first target at 100.02. Somewhere in that area. Target 1. target to around 102. And target 3 around 105.63. Yeah. Okay, I hope that you remember that trade, part of it. I will make this window smaller. Sorry. So here it was the first order. Okay, and now I want to see all those things with indicators. So I will go to 6th of January. Okay, so into 4-hour chart, okay, I will take some questions. Yes, I will hi Christina, can this trade set up be explained using your system and its indicators so we can understand the mechanics in detail? Yes, this is what I'm intending to do. Why did you enter? Uh, just wait a few seconds and we will find the answer. Thomas, how I'm copying the trend line. Just a second, I will show you immediately. Okay, so it seems that can be interesting, yes, to see how I was thinking. So, on 5th of January, I have the signal on, I have oscillator making one low and the second one. Just I will take a little bit the signal to so here I have the cross on 4-hour chart. Here I have the cross of RSI. I have a low on oscillator, and here I'm very close to a signal for buy on MACD. So here is one signal. Here is the second one. After a few hours, so on 6th of January at 15:36, I was into that trade somewhere in that area. And after a very short time, I have also confirmation for SAR. I have confirmation because the pair start to go from the lower Bollinger Band to the upper Bollinger Band. And here, actually not in that place, a little bit later I have that signal. And the trade starts to develop. Actually, my expectation for this trade was given by the fact that on daily I have also the signal for buy confirmed, and I will try. I don't want to spoil the surprise of that trade, but we have to understand. So we had one downtrend that start on April 2011, and we have the waves here. 1, 2 was the third one, the fourth, fifth. So on daily, on 6th of January, we have also one low on oscillator. We have the cross of RSI. We have very close one signal for MACD. So we have a big chance for that trade to be for a long period. We have a very strong signal on daily, and we have a very strong signal on 4-hour. The blue lines here are the signals that we established, that we received on 4-hour. on daily, we have a little bit later the signal. Here is 1, and we will see why we have several 1, 2, 3 signals for daily until the MACD came with 1 confirmation. So let's go back to 4 hour. Okay, so I was into the trade. There, and mm, when we are going into one 4 hour trade, we are expecting to stay into that trade maybe for a few days. But if we have also the signal for daily, we have we can stay probably weeks or more into one winning trade. Actually, because it was one trend line, and it was I will delete that wave because it is possible to be confusing. And I will draw the channel. So how I'm multiplying the trend line? Click on Control and click on left button of the mouse when the trend line is with those 3 points on it, and just move it. So for 4 hours, it's okay if we take just the so I took just this small trend channel because into 4 hours we don't when we are initiating one trade into 4 hours, we don't intend to stay so much. This was one special situation because I have the signal on daily, and also I have the signal on 4 hours. So on this channel, 1, 2, 3, 4 waves. We can. I will not put more lines because I have to. I have also to draw some other things. So here it was the first target around this. One hundred, 102, 105. 102.30. This was the value. And 105. So actually, what was the idea? On that trend line, I just draw the Fibonacci. On that trend channel, starting with that point, I just draw the Fibonacci until the point when I receive the signal. Here I have the signal from RSI, and a little bit later I have the signal from daily. So actually this, something like this is what I'm seeing in the moment of the entry. No, it's better. Okay, so first first target was around 38.2 of Fibo. The second target was a little bit over 61.8. The last target was at the a little bit under the superior trend channel line. Yes, here was the third target. Okay, so please, if you have any question up to now, up to this point. So Krishna, if I miss the entry signal on support line, can I enter in the middle of the channel on the next signal? Actually, if you cannot resist and you want to be in the market, go into one smaller time frame and stay less into that trade. You have to see all time frames. If you have one situation like that one on Euro GPI with one signal on 4 hour with confirmation on daily, I think that is not a problem to go later into the trade. Actually, I am not recommended to go in this type of situation because at when there are the very important trend channel line is we have a lot of possibility to have a lot of intervention from outside, as we already have had there, because we have in less than 2 weeks, the downgrade of Europe, the infringement of Hungary, and the central bank decision to lend gold. So it was quite difficult to be into one trade in that situation. The signal from MACD was on daily. Yes, I was on daily. So the signal on MACD on daily came later, but it was clear that we are going on daily also to have one signal from MACD too. I explained several times that my main signals are coming from crossover SI and oscillator of moving average. Oscillator of moving average is same like MACD, but the signal of oscillator of moving average is a little bit quicker and more sensitive than MACD. You can see that we have a lot of signals on oscillator of moving average, but on the MACD, just a few. So in that period, we have here the signal from oscillator, we have the signal from crossover SI, and MACD on daily was close to the signal. But in the moment when I was in the trade, I don't have the signal on daily. Actually, it was the last wave on a very important move. If we put the Fibo on the last wave, we can see that this point was very close to 1.27, is very much for the fifth wave. Here, sorry. Here, if we put the Fibo exactly in the bottom of the candle on the shadow, we have that low made on 6th of January between 127 and 141. If we put at the body of the candle, because we are on daily, we are at level of 141.4. It's very much for fifth wave. This I was quite positive that in this point we will have one return of the market. Also, into 4 hour on the channel was a low, was hit the inferior line of the channel, and also I have the signal. So for me was clear that I have to go into one buy. Christina, when you have more than one target, what do you do when the first target is reached? Um, Actually, I'm pointing those targets because in those areas the pairs are starting to make swings. 38.2 is one Fibo level that is well known and is preset on the platform. Also 61.8. So maybe a lot of traders are not using all those levels of Fibonacci, but they are paying attention to 61.8 and to 38.2. This is the reason why they can close position, and we can see in those areas swings of the pairs. Okay, stop loss decision. Stop loss decision was before the signal appeared. I went, sorry, I went to smaller time frame, and stop loss was something immediately under that body of the candle. If you want to be more conservative or so, you can put that stop loss under the candle that was under the last low made by the pair before the signal place. Here we have the signal. In that area was my entry. A little bit earlier than. You can put the stop loss under the trend line, under the Bollinger Band, under the last candle, last low or so. It's okay. Okay. I will show you how it was in that period because I was sitting in that trade. First one was on 6 and the second one was 13 of January. After the message for the country from Europe was downgraded. So start to pass the time. I was intended to stay not so much, but I was very confident in that trade until 13th of January. I don't know if there's any of you that have superstition or so. I don't have, but on 13 was a bad move. So we have those three candles that are coming for the fact that Europe, I don't remember, 6 or 7 countries from Europe lost their triple A grade. But actually it was very difficult to believe that the European country was so economically strong comparing to United States. So was one decision that was expected, and the markets already included in the price at that time. So we don't have a very big drawdown. When I hear the news, I changed the stop loss, and I decided to wait until the pair will test the inferior trend line of the channel. But it stopped. And the signals was confusing, was not, I don't have for sell here for 4 hours the same signal on MACD or on day. And also very soon it was a new signal for buy. This is why I went in a new trade here. Here I think that one was 13. Yes, let me check. 13. 13 at 16:20. So a few minutes after that, when it was that signal, fourth signal here. Here was sort of signal for buy too. Here was anyway. When we have political statements, there are you will see in time that we have a lot of signals that are a little bit confusing, like that one that was in that period. Okay, so here was a clear signal for buy, and also confirmed into MACD. So I rest into that trade and rest confident. I also moved the stop loss under. So when I had the downgrade news, I put the stop loss somewhere in this area. After I saw those signals, I moved the stop loss higher under Bollinger Band. And after that, I was moving with SAR, with parabolic SAR. Okay, it passed some time, and on 15th of January, we had the infringement of Hungary. 15 in that area was not so strong. This is why the signal was not confirmed. So that was the event that made quite difficult for me to maintain those trades. But this is in trading. Sometimes you have to face those kind of things. And on 18, we have already the decision of the banks to lend gold. So in this area, I was convinced that the trades are okay and will go into positive and will reach the target. So why I'm talking about did you do profit there? I think that I was out from those trades, I don't know, at this superior trend channel or so. I didn't, I really don't remember where. Just I know that I was so many events, that was difficult to wait until to the first target or so. Is one period that is difficult even for traders that have a bigger experience on the market. Okay. But after that, you could see that the pair was reached first target, second target, and went even higher. So I know that I'm not the strongest person. So this is why I think that a lot of persons that are here with us and are studying this system will have better results that I had. So I think that you are convinced now that you could probably stay longer in this trade. So I'm hoping that you will have better results than me in the future. Okay, so why did I tell you about this trade on EuroGPI? Because it was one trend channel on 4 hour. It was one special point on the 5th channel. And I want you to remember the situation that we have on euro dollar today. we have those waves. We have this channel, probably you are familiar with this, and I want to be very careful the trades that you are making in this area. It's possible to have different announcements. It's possible to have a very violent reaction. It's possible to have, I don't know, a lot of surprises. Okay, so I will go now to talk about candlesticks, and will be a part for beginners. So um, I will go to talk about some elementary things regarding candlesticks. Okay? Any questions? When moving the stop loss like this, how do you keep in line the risk percent of your account? We will have one webinar of money management, and I never go to maximum risk with stop loss or so. So I can move the stop loss, and actually I prefer to have the choice to do this. And also we have to remember that for daily and for our chart, you have big differences of move of the pair. You have a lot of pips between the levels of FIBO. We have to consider all those things. It was very okay, so here it was. If you remember, on that FIBO, should be a very good chance the stop loss to be at 141.4 FIBO, so 96.27. So stop loss would be in that area. A little bit under this level, maybe several pips, 10, 20 was under that. You can see here also is Bollinger Band on daily. If you are considering the stop loss on daily and on FIBO on the last wave, you put stop loss at 141.4, considering that will be something very strange, something very unusual, and the pair will go to lower than 127. 127 is a very big level for the fifth wave. Sorry, fifth wave is the weakest one. The last two waves from 1 to 3, 4, 5 move from Elliott wave theory. The last two waves, 4 and 5, are the weakest. So it was quite impressive, the last wave. Okay. Okay, so because we don't have too much time, I will go to the candlestick and I will talk about this. And I will try to answer the question later if we have a few minutes more or so. Okay? Okay, so candlesticks are invented by Japanese. They are very nice. Provide us one visual representation of data concerning price movement for one specific period of time. So the pair is let's say that we are in a 4-hour time frame. So the open will be here, the close here, but in those 4 hours we can have one bigger variation. We can have a low and the pair to have one retrace, and we can have a high and also the pair have one retrace. Those parts of the candle are named shadow, and actually there are the emotion that are in the market. That one is the body of the candle, the real body, and is the effective variation of the pair. If we move into one other time frame, one candlestick will have the open at the beginning. Let's say if we are moving into 1 hour, the open will be considered at the beginning of the hour, the close at the end of the hour. The real body is rectangular in shape and it starts from the open price and ends with the close price. The upper shadow indicates the high prices, while the lower shadow indicates the low prices reached during the specific time frame. Some types of candles don't have a real body, a wick, or both. Okay, so we can meet some candlestick patterns, candlestick formation, and those are indicating the reversal of a trend, and this is why they are important to know about those candlestick patterns. So we have here morning star, yes, and evening star. Characteristic of the morning star, what are there? Formation is made up of 3 candlesticks. Yes, 1, 2, 3. 1, 2, 3. In the mirror, we have the evening star. The first candle is a big black candlestick, or one candlestick that is showing us a downtrend, bearish candle. The second candle is situated below the first one and has a small body. You have that one is have a very small body comparing to the other two. The color of the second candle is not important, so it can be a bearish candle or a bullish candle. The third candle, which is a white candle, is situated above the second candle and breaks through around 50% of the first candle. Appears on bottom and signals trend reversal. So morning star is one signal for that is indicating one trend reversal. Evening star in the mirror is a formation also made up of 3 candlesticks. The first candle is the big white candlestick, which continues the increase of the trend, that one. The second candle is situated above the first one and has a small body. It's not important the color. And a small candle like this, or doji, is indicating that the market is not certain about the direction. And the third candle, which is a black candle, is situated under the second candle and breaks through around 50% of the first candle. Appears on tops and signals trend reversal. So, is one top and reversal. Morning star is the bottom and reversal. Here we have bullish engulfing and bearish engulfing. Probably you already read in the manual about those candlestick patterns. What are the characteristics of the bullish engulfing formation? Formation is made up of 2 candlesticks. The first candle is a black candlestick, a bearish one. The second is a white candlestick, bullish one. The second candle has an opening price under the previous candlestick closing price, and the closing price above the previous candlestick opening price. It has that means that this candle covers the all previous candle, is engulfing it. Appears on bottoms and signals trend reversal. In mirror, we have bearish engulfing. So we have also two candles. The first candle is a white candlestick which continues the increased trend. The second candle, which is a black candle, has an opening price above the previous candlestick closing price, is totally engulfing the previous candle, appears on bottom and signals trend reversal. Dark cloud cover and crossing line. This is the dark cloud. Formation is made up of two candlesticks. The first candle is a white candlestick which continues the increased trend, trend that is increasing. The second candle, which is a black candle, has an opening price above the previous candlestick closing price, but breaks through around 50% of the first candle and does not exceed its body. Appears on top and signals trend reversal, as you can see in this example. Forcing line, two candlesticks. First candle, black candlestick. We are coming into one downtrend when appear this formation. The second candle is a white candle, has an opening price under the previous candlestick closing price, but breaks through around 50% of the first candle and does not exceed its body. Appears on bottoms, and signals trend reversal. Here we have hammer and shooting star. In the mirror, you have the hammer and shooting star. Hammer is a candlestick with a small upper body with long bottom shadow. The color of the body makes no difference. Appears on bottom and signal trend reverse. Shooting star, also small body with a long shadow. The body should not represent more than 1/3 of the entire formation. This one appears on top and signals trend reversal. Okay, so we exceed the time for this webinar. I intended to show you a few examples on the charts of those candlestick patterns, but you can find by yourself if you are plotting into the charts the zigzag. So if you have any question regarding candlestick, please. Is this candlestick pattern for a specific time frame or any time frame? You can find those candlestick patterns on any time frame, even into 1 minute charts. And also, you will see that also we can find into 1 minute chart price patterns. So It's not something unusual. Okay, so we don't have any more questions. So, thank you that you was here with me today, and I'm apologizing again because I have flu and I'm coughing. Um, I'm sure that in the next webinar I will be better and will be okay. Okay, thank you all. Okay, bye. Thank you, Carlos. I will come with more examples in the future. I just want to be all of you more familiar with some topics that I'm using into the system, because otherwise can be very difficult to be it can be very difficult to understand what I'm doing into one trade. Okay, thank you and see you in the next webinar. Bye bye.